Golden Ocean Group, stock ticker GOGL, trades at its 52-week lows and pays a huge dividend. Or does it? We're going to analyze Golden Ocean Group stock using the Select 6 analysis. It reverse engineers Warren Buffett's decision making when he's looking at a company. We'll start by looking at the most telling business numbers before we estimate 3 different fair values for Golden Ocean Group. Along the way, there's going to be a key bonus metric. It just might be the tipping point when analyzing GOGL stock for your portfolio. You're going to want to watch as we estimate all 3 of our fair values before you stay for our rating, which at the end of the video may surprise you. So is Golden Ocean Group a potential opportunity? Right now they trade for $7.30 per share. That's just 40 cents above their 52-week lows. They're down $3 from their 52-week high. This year has been rough. They're down 9.5%, while the S&P 500 is up 12.5%. These returns aren't all for shareholders. Right now, GOGL pays a huge 9.92% dividend yield. This beats the market by a lot. In 2023, the company paid out 40 cents in annual dividends. That was down from 2022. They paid $2.35 per share in that year, with over a 25% dividend yield. Historically, Golden Ocean Group's dividends have been sporadic. After taking a break, they started paying these in each year since 2018. Though they've missed dividend payments here and there, especially in 2020. This is because shipping is a cyclical industry. In the last 5 years, they've compounded at 2.5%. But when we go back to when the business was listed in 2015, their stock price is down 71%. That's down a ton compared to the market. Shipping has a boom and bust cycle of high highs and low lows. Right now, 3% of the company's shares are sold short, and Golden Ocean Group is a $1.5 billion business. But the burning question is, why should we be paying close attention to Golden Ocean Group? Golden Ocean Group Limited is a Bermuda-based dry bulk shipping company. Its business involves the transportation of dry bulk cargo, including ores, coal, grain, and fertilizers, through its fleet of owned and chartered bareboat and commercial management vessels, and new buildings are chartered out on fixed-rate time charters and index-linked time charter contracts. As of March, the company owned a fleet of 74 dry bulk vessels. Now with that background, let's dive deep into their numbers. Metric number 1, we want their average return on capital in the last 5 years to be above 14%. A normal business earns 7% returns on capital. Shipping is a cyclical industry. We get to see the company's boom and bust cycle in their return metrics. Their returns were declining going into 2020. Since then, they've been much higher, but these are coming back down. They peaked at 15% returns in 2021. In their last 12 months, they've earned just 6.5% returns on capital. When these are averaged out, Golden Ocean Group earns 7.5% average returns on capital in a given year. That's pretty much average. It's down from our benchmark. This is an X on metric number 1. Metric 2, we want growth in their sales, earnings, and free cash flows. We see the same boom and bust in these numbers. Their sales are up 43%. Today, they brought in $940 million of sales in their last 12 months. Their earnings have more than doubled over this time. They're at $200 million in their last 12 months. That's cut in half from where they were at in 2022, but it's doubled their numbers from 2018. The big one is their free cash flows. These were positive in each of the last 5 years. However, they're negative in their last 12 months. That may be a concerning sign for shareholders going forward. A company like this operating in the shipping industry can have good years for their free cash flows, and then they can also have a lot of years where they earn little to no free cash flow, or where these are either very small or non-existent returns. You really need to understand why their free cash flows declined. It may come as solace to shareholders that their cash from operations aren't down horribly from where they were at in 2022. These were at $346 million in their last 12 months, but the company spent $413 million on CapEx. This is why they have negative free cash flows. Part of the reason the shipping industry has these cycles is because there's a lag time for supply to come into the industry. If you think about it, it takes a few years for ships to be built in a shipyard. Even though they're outlaying this CapEx now, it might not be a few more years until they really see this benefit their operations. That may not necessarily be the case. You'd want to dig into the company's filings to learn more. Still, as they're spending more CapEx in their business, their free cash flows are down. This is an X on metric number 2. We're 0 for 2 so far. In our third metric, we want earnings per share growth. We learned that their earnings have more than doubled over this time. By the same token, Golden Ocean Group has diluted shareholders by 39%. Most of this dilution came between 2020 and 2021. Still, their earnings have grown faster than this. Their earnings per share are up over this time. It's our first check of the day on metric number 3. Metric number 4, we want free cash flow per share growth. Because the company's both diluted existing shareholders and they now have negative free cash flows in their last 12 months, their free cash flows per share are down. It's an X on metric number 4. So far, to recap, we have 1 check and 3 X's through 4 metrics. Before we look at the company's balance sheet and get into our value estimates, why don't we check in on our bonus? Right now, Golden Ocean Group pays a market-beating 9.9% dividend yield, but is it safe and can this grow in the future? In our bonus, we want their dividends to be supported by their free cash flows. That's only happened in 2 of these years. They supported these in their most recent year and in 2019, but in the rest of this time, they have not. As a commodity company in a cyclical industry, it's going to be very hard to judge their dividends and whether these are sustainable into the future. You really need to have an insight to understand this business and see where their performance is likely to be at in order to determine whether or not they'll continue paying dividends. Without issuing equity, debt, or by selling something, most companies need to support their dividends using their cash flows. Golden Ocean Group's cash flows again are negative in their last 12 months. This could put their dividend under some pressure. It's not supported today, which is an X on our bonus. In recessions, it's businesses with too much debt that can have the biggest losses and even go broke. In metric number 5, we want their net debt to be below the sum of their free cash flows in their last 5 years. Golden Ocean Group has had pretty stable levels of net debt over this time. They ended 2022 with $1.1 billion. Today they have $1.3 billion. In their last 5 fiscal years, they produced $816 million of free cash flow. That's not quite enough to support their debt load. They also have negative cash flows today. This is an X on metric number 5. While they have generated free cash flows, much of this came in 2022. You need to understand how this debt is structured, when it matures, and if there are any covenants associated with it to see if this could really cause big issues for the company or not. In metric number 6, we want their average free cash flow divided by their enterprise value to give us a yield that gives a risk premium to the 10-year treasury. Right now, they have a $2.9 billion enterprise value. This adds their net debt and their market cap together. It looks at Golden Ocean like it's a private company. In the last 5 years, we learned they produced $816 million of free cash flow. This means they produced $163 million in an average year. But as we've learned, these free cash flows have been lumpy year to year, with over half of this coming in 2022 alone. However, when we divide that average by their enterprise value, we get a 5.6% average free cash flow to enterprise value yield. Today, they have a negative current free cash flow yield, but free cash flows can be lumpy year to year. And as we learned, this wasn't because of a huge deterioration in their business results, it's because of increased CapEx, which if you dig in, you can understand how much of that is for maintenance and how much of that is for growth. We're looking at their average here, so technically on metric number 6, this is a check. Don't just run out and go buy the business. You're going to want to watch as we estimate all 3 of our fair values before you stay for our rating, which at the end of the video may surprise you. Everything we've covered so far is important. There's something missing that in my opinion is the main reason to analyze Golden Ocean Group. Here we'll use a discounted cash flow model to estimate their fair value per share. A DCF model is like any model in any field, its outputs are sensitive to its inputs. We're going to start with an average of their free cash flows in their last 3 years. Keep in mind this does include a pretty big boom time for the company. Their free cash flows today are negative. This means their free cash flows would have to turn around by quite a bit to be where they're at historically. It's up to you to figure out if these will be accurate or not. Golden Ocean Group has not been predictable in their past, in part because of their cyclicality. We'll assume that their free cash flows decline by 9% in each of the next 10 years. Then in the next decade, we'll assume that these continue declining. One question you might be asking yourself is, how does a company with negative free cash flows have any value? That comes in when we look at their tangible book value. This estimates their net worth based on their tangible assets, things like plant, property, and equipment. If we want a market-beating 15% rate of return, which is what Warren Buffett looks for from his investments, at today's valuation multiples, an estimate of Golden Ocean Group's fair value is around $13.70 per share. That's almost double their current stock price, but please be mindful, this is a rough estimate for the business given its predictability. This discount rate is an estimate of total returns to shareholders based on these free cash flows and their tangible book value. It already includes their huge 9.9% dividend yield if they keep that going into their future, so their stock price would not appreciate by this full amount. With companies that it's hard to predict like this, it may not always be the most accurate to use a DCF model. We'll also take Guru Focus's fair value for GOGL stock. This is based on historical multiples and analyst estimates for their future. Right now, Guru Focus puts this fair value around $6.15 per share. Now let's get to the surprise you patiently waited for. Let's review their numbers and combine their fair values as we give Golden Ocean Group a rating. In our analysis of Golden Ocean Group, stock ticker GOGL, we've learned that this shipping company has had its fair share of booms and busts. It was originally a spinoff from Frontline in 2004. Since then, it's had a rocky time in public markets. Since being relisted in 2015, their stock price is down 75%. But in the last 3 years, the company's performance has actually crushed the market. This was as they saw a boom in the shipping industry. Still, throughout the last 5 years, even with this run-up, their average returns on capital are just about average. They've grown their sales and their earnings, but their free cash flows are down due to higher capex spend. The company also has diluted shareholders by quite a bit. They don't produce enough free cash flow to support their net debt position. While their average free cash flows may look attractive to the 10-year treasury, most of their free cash flows were pretty lumpy coming in 2022, and today they have this negative yield. The company's huge dividend may be at risk here, as it depends on how management will allocate capital going forward. They may not always have these excess free cash flows to return as big dividends. Overall, GOGL goes 2 for 6 on our Select 6 analysis. When we combine our fair values, an estimate of Golden Ocean Group's fair value per share is around $9.40. That's a couple of dollars above their current stock price. It's well within where they've traded in the last 52 weeks. If you have a special insight into understanding where the trends in global shipping are going, Golden Ocean Group looks like an interesting candidate for more research. If you enjoyed today's GOGL stock analysis, like it, subscribe to the channel for more, and watch this next video.